Let's face it, the market is noisy. It loves to fake you out. One minute you think you see a breakout, you enter the trade and bam, wick rejection, and you're stopped out. Most traders try to fix this by staring closer at the candles, but that usually makes it worse. The solution isn't looking closer, it's stepping back and smoothing out the data. Today, I'm going to show you how to combine a powerful market sentiment filter with a unique twist on the Heikin-Ashi candlesticks. We aren't just using regular Heikin-Ashi, we are fixing that flaw with a smooth version that lets you ride trends with laser precision while avoiding the fake outs that destroy beginner accounts. This is how you stop guessing the trend and actually start trading it. Section 1. The problem with regular Heikin-Ashi. First, let's talk about the hack. We all know Heikin-Ashi candles are great. They take volatile price action and smooth it into a readable trend. Green, 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 red, red, red. Simple, right? But there is a massive drawback that nobody talks about. Regular Heikin-Ashi candles do not show you the real price. They average the data. This means you can't see the real high, low, or close. Why does this matter? Because you can't spot valid support and resistance, and you definitely can't backtest accurately. You are essentially trading blind. This is where the smooth Heikin-Ashi indicator comes in. Unlike the default settings, this tool plots the smoothed average over your real candlesticks. It gives you the best of both worlds, the noise reduction of Heikin-Ashi, but the precision of real price action. There is a silent killer in trading that almost nobody talks about. You can have the perfect strategy, you can predict the market direction perfectly, and yet you still lose money. Why? It's called friction. It's the combination of high spreads, slow execution speed, and commissions that eat away your profits before you even close the trade. I'm going to walk you through how to strip away that friction so you can trade like a bank, not a retail beginner. And we're going to use a specific type of technology called ECN to do it. Let's dive in. First, let's understand the trap. Most new traders sign up for standard accounts. These brokers often act as a market maker. Essentially, they are the casino. When you lose, they often win. Because they are taking the other side of your trade, there is often a conflict of interest. You might notice that your orders get filled slowly, which we call slippage, or the price you buy at is slightly worse than the actual market price, which is the spread. If you are scalping or day trading, these tiny costs add up to thousands of dollars a year. You need a broker that acts as a bridge, not a wall. This is where today's partner comes in. This brings me to the sponsor of today's video, AAAFx. I'm partnering with them specifically because they solve the exact friction problem I just talked about. AAAFx has been around for over 15 years, which in the crypto and Forex world is ancient. They are regulated by the HCMC in Europe and the FSCA in South Africa, so they are fully compliant. None of that shady, offshore, unregulated stuff. Here's why you should care. AAAFx offers true ECN, electronic communication network execution. This means they connect you directly to liquidity providers. They don't trade against you. Execution speed. Their speed is clocked at around 10 milliseconds. Spreads. Because it's raw ECN, spreads start at 0.0 pips. They have a few account tiers, but two stand out to me. The ECN Plus account. If you're a serious trader, this gives you some of the lowest commissions in the industry. $1.50 per 100 KES. The ECN Zero account. If you maintain a larger balance, you pay zero commission on trades. That is massive for your P&L. And for my audience watching globally, AAAFx Global offers leverage up to 1 to 500, giving you the flexibility to manage your capital how you see fit. Stop fighting against your broker. Click the link in the description to check out AAAFx. Open a demo account to test their speeds yourself and see the difference raw spreads make. Now, let's say you don't have time to stare at charts all day. There is another strategy called copy trading. Most people do this wrong by following random people on Twitter. But AAAFx has a deep integration with ZuluTrade, which is one of the world's biggest social trading platforms. Because AAAFx executes so fast, you can copy professional traders' signals with almost zero delay. You can essentially automate your strategy by leveraging the experience of veterans. And you aren't limited to just Forex. On AAAFx, you can trade CFDs on crypto, Bitcoin, Ethereum, US stocks, Apple, Tesla, etc., commodities, gold, oil, indices. It's a one-stop shop. Whether you want to day trade gold or swing trade Tesla, you can do it from one MetaTrader 4 or MetaTrader 5 account. One final thing I look for in a broker is how easy is it to get my money out. I've tested this with AAAFx. They offer withdrawals via bank wire, credit cards, and even cryptocurrency, USDT, Bitcoin. Crucially, they don't charge deposit fees. If you deposit $500, you trade with $500. They treat your capital with respect. Here is my challenge to you for this week. Go open a free demo account with AAAFx using the link below. Pull up their chart alongside your current broker. Watch the spread during high volatility news events. You will likely see the difference immediately. If you want professional execution, regulation, and 15 years of trust, AAAFx is the way to go. Huge thanks to them for sponsoring this channel and helping us keep the lights on. If you want to learn my specific scalping strategy for the EUR USD pair, click this video right here. The strategy I'm about to share with you, will you use it with this broker? Let's go. Section 2. Let's get this on your chart. Go to the Indicators tab on TradingView. Search for Smoothed Heiken Ashi. Make sure you pick the one created by Jack. Out of the box, it might look a little cluttered. Let's clean it up. Go to the settings, head to Style, and lower the opacity of the wicks. This ensures you can still see your real price candles underneath the smooth trend. In the input settings, you'll see two values for smoothing. Higher numbers equals less chop but slower signals, good for catching big trends. Lower numbers equals faster signals but more fakeouts, good for scalping. For today's strategy, we are going to stick to the default settings because they offer the perfect balance. Section 3, the strategy context, adding the filter. Now, we don't just enter trades because a candle changed color. That's how you lose money. We need context. Rule number 1, we only look for buys if the overall trend structure, higher highs, or our sentiment meter is green. Rule number 2, we only look for sells if the market is making lower lows or our sentiment meter is red. Once we have that bias, we use the Smoothed Heiken Ashi to pinpoint the entry. Section 4, the entry strategy. All right, let's look at a long buy setup. Here we are on USD JPY. Identify the trend. We see the Smoothed Heiken Ashi, let's call it the SHA, is green and sloping upward. Price action relation. Crucially, look at the real price candles. They are trading above the smooth line. This is a strong bullish sign. The trigger, we want to buy the dip. We wait for price to pull back toward the Smoothed Heiken Ashi line. Dynamic support. Since the line acts as dynamic support, we watch for a bounce. The moment we see a rejection of that zone and the SHA candles remain green, stop loss goes strictly below the recent swing low. We enter. Take profit, target the recent swing high, or aim for a minimal 1-2 risk to reward ratio. Section 5, the short strategy and double confluence. Now for a short sell setup. The Smoothed Heiken Ashi is red. Real price candles have broken below the smooth line. The trap, wait for price to rally back up and touch the red SHA line. If it rejects and stays red, that's your entry. Rapid fire pro tip for advanced traders. Add a second Smoothed Heiken Ashi indicator. Set the first one to 8, fast. Set the second one to 20, slow. Now you have a trend cloud. If both the 8 and 20 are red and price pulls back to the zone between them, that is a high probability kill zone for sell orders. Never trade against the slower 20 period line. If the 20 is red, you only look for shorts. If the 20 is green, you only look for longs. This keeps you on the right side of the market every single time. Section 7, important warning and outro. One final warning. Do not simply trade the crossovers, red to green changes, blindly. Indicators are lagging tools. If you wait for the color change, the move might already be over. Use the Smoothed Heiken Ashi as dynamic support and resistance. Buy the pullback to the line, don't buy the breakout away from it. If you found value in this new strategy, make sure to hit the like button. It helps the algorithm show this to more traders like you. Subscribe so you don't miss our next deep